Well, supply chain disruptions, labour shortages, rising prices, all very challenging, of course. But despite this, the financial performance of big tech in 2021 was staggering. I was just on Google, and collectively Amazon, Apple, Facebook, Google and Microsoft topped 1.4 trillion in revenue. That would rank at 13th in GDP as a nation, just behind Brazil, ahead of Australia. That's according to the World Bank. So the big question is there a limit on growth? And that is the question that Senior Product Specialist Tim Brown is going to be asking his panel now. Tim.
Thanks, Lucy. And yeah, now we are joined today by Alison Porter and Richard Clode, who are portfolio managers within Global Technology. Going to start off with what I hope is quite a simple question, but complex answer, which is, what do we mean by big tech?
Well, morning, Tim. Lucy prefaced a bit of that already. I think when most clients think about big tech, they start with the FANG, and obviously that was an acronym that was coined in 2015 when those four stocks did phenomenally well. It doesn't work anymore because Google changed its name to Alphabet and Facebook recently to Meta. But since then, those four stocks have performed incredibly well again. So 100% to 500% returns since then. But they've actually been outpaced by Apple, which is up 600% since then, and the first company to get to $3 trillion market cap, and only got to $1 trillion just over 3 years ago. So between those companies, you've got $7 trillion of market cap. Then you've got to add in Microsoft, which is another 2 trillion. You've got to add in the likes of Visa, MasterCard. That gets you to 10 trillion. To put that in context, that's the estimated total amount of gold value in the entire world today. And then you've got some newcomers. So we shouldn't forget about NVIDIA, which is up 30 times since 2015 and just over actually overtook Meta to be the 7th largest stock in the US, and is closing in Berkshire Hathaway, which could actually be argued to be a closet tech stock, given its largest asset is a 5% stake in Apple worth $150 billion. So we'd also wouldn't want to forget about Asia as well. You've got Tencent there, which is a $600 billion market cap company. Alibaba's obviously had a tough year, so half that, but another trillion there. And then also with TSMC, which has actually just recently usurped Tencent to be the largest market cap company in Asia. Probably one of the largest tech stocks you've never heard of, would be a big tech stock for us in Asia as well.
And Tim, I would just add to that, 5 years ago, we would be asked, why would we have Apple in our top 10? Who is the next Apple? And we were asked exactly the same thing 10 years before and 15 years before that. And very often the next Apple actually was Apple. Because technology adoption tends to happen at an exponential rate with viral network effects. And these companies have huge free cash flow, which they invest in research and development. And if you look at the top 10 largest spenders on R&D globally, 7 out of those top 10 are technology companies. So you create this virtuous technology cycle where those companies are investing in becoming the next future big tech companies.
So, just leading on from there, focus on, let's say, the metaverse you just mentioned. Does it represent another opportunity that big tech will benefit from, or is it going to signal perhaps the end of their dominance?
I think first of all, we've got to think about what metaverse is. So, there are various sort of definitions of that. I always like to think about the medium of film. So I think about the Oasis in Ready Player One. But, to think about, a 3D internet, an internet where you're not just viewing content, you're in it. This is something that is persistent, it's synchronous, it's live, it sort of spans both the digital and physical world. So, that's how we sort of think about a metaverse. And when we think about sort of big tech, they're very well sort of placed for that in terms of, Apple is rumored to be launching its sort of mixed reality headset later this year. Meta has obviously bet its name and the whole house on moving into the metaverse and has an early lead with Oculus, which he bought many years ago now. You've got Microsoft that wants to be sort of a key player in sort of the collaborative work tools that it has in the physical world, now moving into the digital world. And you have companies like NVIDIA where if you're going to want to use all of these graphics to have this sort of digital world, you're going to need a lot of their chips as well. So we think big tech is very well placed for the metaverse, and that's why if you look at all of these recently launched ETFs, in metaverse ETFs, you'll see that, of their top 10, 5 of them would be big tech.
And, Tim, we think, it's still very early to define what that metaverse ultimately looks like. But the path to get to the metaverse, we view very much as evolution and not revolution. And the things that are really attractive about the metaverse are its immersive experience, a 3D type of experience, and also the fact that it's decentralized, that there's no one single operating system. So there's the issues around developing the issues are not around developing hardware or use cases, because there are many of those, and not around building a business model, but it's whether there'll be that trust in actually using the metaverse. And we can see that in some of the difficulties that we already have in verification of NFTs, for example. And to be able to really build that trust, security and privacy is core. And we may look back on the era of thinking when we had big tech controlling content and privacy, we may look back on those days very fondly, versus the metaverse, where we don't have those security and privacy controls built in or defined as yet.
And when it comes to big technology, one of the things that we all hear about a lot is regulation. We hear a lot in the press around increasing regulatory pressure, especially on the tech sector more broadly. Is that limiting for big tech companies?
Well, first of all, I would say, regulation it happens in a linear fashion. And as I mentioned before, technology develops in an exponential manner. And it's been a constant right from when we saw Microsoft and Intel being looked at for anti-competitive practices during the PC era. And that was just as we moved to the internet and just as we moved towards the mobile tech experience. And, we may look back, and as focus is on search and social media now, just as we're about to move into this new phase of the metaverse. But, to answer your question directly, I think in terms of acquisition growth, yes, regulation will place limits on the ability of big tech to acquire other companies. Between Apple, Facebook, and Alphabet, they have over $200 billion in cash. And the use of that cash, we think, increasingly will be towards share buybacks and even dividends, where Apple is leading, because the ability of those companies to acquire in the way that they have before will be limited. However, in terms of organic growth, the cash flow, that investment in R&D we mentioned before, actually much of regulation creates barriers to entry and creates an additional cost base for many smaller companies. So in terms of organic growth, we don't see that regulation will be a barrier to growth, just as it hasn't over the last 15 to 20 years.
That's really interesting. I think. Go ahead, Richard.
So I was just going to add, obviously we've had sort of a bit of a test case of that with, the NVIDIA ARM deal collapsing recently, where that sort of raised regulatory concerns pretty much everywhere in the world, from the UK to Europe to the US and in China. And I think it'd be quite an interesting acid test when we look at sort of Microsoft and Activision. Again, all of these antitrust concerns very much come down to how you define the market. And obviously Microsoft want to sort of view that as a very fragmented games market, but I think that would be a good acid test, is to see, some of these kind of new legislation that's coming through in Washington, to what extent there will be, big tech be allowed to buy anything at all. I think that would be a good acid test for that.
So I think there's going to be a lot to come down the pipe in terms of sort of regulatory issues, and it'll be interesting to see if we've got any questions from the audience later on that subject. Let's move on to, I think the question of longevity. Historically, the sector's been littered with numerous once dominant firms that, diminished, subsequently. Is this a trend which you expect to continue?
The leaders of today and of today's technologies are always at risk from the disruption of future technologies and future technology companies. That's exactly where, what Facebook was, when it was a disruptor, or Google as a disruptor in their early early days. And I think, that's always going to be the risk for them. I think what's different this time is a couple of things. I think one is, as Alison was saying, that these companies are just so profitable and have such a powerful flywheel. They can make, extraordinary amounts of R&D investment in the new technologies. And they're all desperately, most of them, in many cases, are still run by founders. They're desperate to avoid their sort of Kodak moment, that move from analog to digital, and that bankrupted Kodak famously. They want to avoid that. So you've seen, Amazon invest in the cloud, Alphabet make all sorts of moonshot bets. All of these companies are investing in the new best things, or buying them when they were able to, whether that be, Facebook with Instagram, or Google with YouTube. And so that's one part of protecting their future growth and protecting them from being disrupted. And I think the other side of it is, when we think about these future technology growth drivers and themes, most of these big tech companies are very well placed for that. We've talked about how well placed they are for the metaverse, but when we think about clouds, again, that's dominated by three of the big tech companies. When we think about AI, what do you need? You need a lot of data and a lot of compute. Well, if you dominate hyperscaler cloud and you're one of the biggest consumer internet-facing companies, you're going to have a lot of data too. So they do have, very strong advantages going into these new technology trends. Which doesn't mean they're not going to be disrupted if they, rest on their laurels, but they certainly have a lot more advantages than they did in the past.
So we have got a number of questions which have come through from participants. The first question I'll ask actually kind of harks back somewhat to that sort of regulation question. The question was, big tech companies can sometimes be viewed with skepticism by specifically socially conscious investors. So how do you engage with these companies? How do you address issues around regulation? Do you get much traction with that engagement?
And firstly, I would say that we very much do have a very direct and proactive engagement approach to these companies. For a company like Amazon, over 120 million people in the US pay for Prime. So that's more people than voted for Joe Biden or Donald Trump in the last election. So voters are quite clear about where they have their trust levels and where they support. And we think that it's very important that we engage for positive action. And with many of these companies, Amazon, we've engaged on labour rights. We've met with their head of health and safety, with their head of human resources. And just over a week ago, they published their first report on workplace health and safety, publishing many of those health and safety stats that we've been asking for a number of years. We've engaged on a whole variety of issues, from mental health and social media to gaming to privacy and environmental disclosures. And we really think that alignment sometimes with founders, it means that they're very aligned with long-term shareholders, not always with short-term shareholders, but they're aligned with long-term shareholders who have all stakeholders and environmental and social rights at heart over the longer term. And we think it's important to engage with them to make sure that they disrupt in a responsible manner.
I think we've got time for one more question, and actually it leads on very neatly from this previous one. So in your view, do markets tend to reward responsible tech companies with high valuations? Are there specific areas in tech where this applies more and others less so?
That's a really interesting question, because we've been working on a white paper over the last year, Tim, where we've actually been looking at companies on a like-for-like basis. So looking at the relationship between ESG standards and valuations across the technology sector. And we think it's quite unique because it's focused just on technology, and looking at companies that have a similar market cap, so the same types of resources, who have similar profit margins and similar growth opportunities. And we found a very consistent and significant relationship between the two, that those companies with the highest standards, like a Microsoft, would get the highest valuations versus those companies which require more engagement, which still have a lot of work to do. For example, in Meta, they would have slightly more work to do and would trade at a discount. So we do see a very strong relationship across, pretty much most market cap sizes and most growth areas. And we think it's really important, and it's really important implications for how we think about our valuation discipline and how we invest in companies, and also how we think about interacting for positive change at companies, because it can really impact not just environmental and social standards, but it can also impact the valuation of the companies and the performance of their stock price too.
And obviously, as active investors, we think that's a real value add for us. We think a lot of, when we think about financial forecasting, we're looking forward, and yet so much of ESG data and ESG third-party research is backward looking.
Fantastic. Well, that was perfect timing. Thank you very much, both, and I will hand you back to Lucy.
Thanks so much, Tim. That was a great last question as well. Really interesting to hear your thoughts, Alison and Richard, particularly on the whole session, but that last question was fascinating. So thanks so much to you all.